Welcome back. As always, I hope you had a fantastic day. Today, the markets ended in the red, pausing the weekly rally on Wall Street. However, the Russell 2000 did end up in the green, however only by a slight bit. The S&P 500 was down 0.78%, the Dow was down 0.41%, and finally, the Nasdaq was down nearly 1%. The strong rally was halted by the latest weekly jobless claims data and rising tension between the United States and China. Today, the Labor Department announced that 2.4 million people filed for unemployment last week, bringing the unemployment filings total during the pandemic to an astounding 38.6 million. Quote, although the number of new jobless claims continues to ease, the sharp rise in continuing claims the week before illustrates that the easing of lockdowns in many states has not yet resulted in any large-scale recall to work for those currently on temporary layoff. There is little evidence that the reopening of the economy has, as yet, led to any sudden snapback in employment, said Paul Ashworth, chief U.S. economist at Capital Economics. After the bell, President Trump said that, quote, we are not closing our country, in reference to a second wave of coronavirus, which Dr. Fauci has stated his belief that there is, quote, no doubt about a second wave of cases. President Trump continued to say, quote, we are going to put out the fires. We are not going to close the country. We can put out the fires, whether it is an ember or a flame. We are going to put it out, but we are not closing our country. Getting into sectors, the rough day was felt by everyone, with oil and gas leading the way down with a loss of 1.5% on average. The tough day was due to news stating U.S. oil and natural gas rigs are at a record low. Regardless, WTI crude has had a nice day, currently being up more than 5%. Telecommunications and industrials posted the best day on average, being down less than 0.7%. Using our table, we see that small cap fared pretty well today, being up on average. Large cap growth took the biggest hit today, being down almost 1%. Today, the US dollar ended its losing streak, posting a positive day that has been elusive this week. The stock that had the best day in the S&P was L Brands, who we covered yesterday after they reported earnings. Today, L Brands, which is the popular retailer which owns Victoria's Secret and Bath & Body Works, was up more than 18.3%. During their earnings report yesterday, they missed on both revenue and EPS. The big move up today was caused by the news that L Brands will be permanently closing 250 US and Canada-based Victoria's Secret stores. The other stock that had a great day was popular American clothing retailer Gap, which was up 11.58% during regular trading hours today. This day came on the back of news that the Gap will be rolling out warehouse robots, which will lower costs for them over the long term, since robotics never get tired and never need breaks. Apparel stocks as a whole moved up on general news of demand returning for clothing stores, due to the retail sector beginning to open up. Analysts believe the demand is from younger consumers who are eager to spend. The stock that had the worst day was the familiar National Oilwell Varco, which was down nearly 6.8%. This movement seems to again be on the news of them suspending their quarterly dividend. The stock that had the second worst day was DXC Technology Company, which was down 6.65%. DXC provides business-to-business IT services. There was no new news that backed up this downward movement. Getting into earnings, we start with Medtronic, ticker symbol MDT, which is a medical device company that generates the majority of its sales and profits from the U.S. healthcare system. Medtronic missed non-GAAP EPS by 17 cents, but beat expectations on GAAP EPS by 5 cents, coming in with an EPS of 48 cents. This was a decline of 44.8% year over year. Medtronic missed on revenue by $100 million, as it had revenue of $6 billion, which represented a year-over-year decline in revenue by 26.4%. Note that Medtronic raised its dividend by 7% to 58 cents per share. Next, we have Nvidia, ticker symbol NVDA, which designs graphics processing units for the gaming and professional markets. Nvidia beat on both EPS and revenue expectations, coming in with GAAP EPS of $1.47, beating estimates by 10 cents and representing a growth of an astounding 129.7%. Their revenue came in at $3.08 billion, beating estimates by 80 million and beating a growth in revenue of 38.7% year over year. Lastly, we have Palo Alto Networks, ticker symbol PANW, which is a cybersecurity company. Palo Alto Networks posted a nice earnings report, beating on both EPS and revenue expectations, which sent shares up more than 7.8% after hours. GAAP EPS was in line with expectations at a loss of 77 cents per share, but for non-GAAP EPS, they beat expectations by 21 cents, with $1.17. Revenue came in at $869.4 million, beating expectations by 37.88 million and being an increase of 19.7% year over year. CEO Nikesh Arora said that the company is, quote, well positioned to leverage the acceleration, referring to certain cybersecurity trends prompted by the COVID-19 pandemic. As always, thank you for watching. Currently, market futures are in the green as Wall Street tries to end the week on a high note. I hope you all have a great night. I will see you again tomorrow.